Welcome to a new update in which we are going to discuss Bitcoin, as Bitcoin is currently consolidating, did a nice try of a sweep of the recent high, and we're going to discuss Aptos. As Aptos is going through the roof, which you should be looking at when it comes to the markets and what you should be doing. Negative funding rates keeps on rising up. Are we on the edge of having a breakdown of the markets because people are getting euphoric at this point? Before we continue, make sure to hit the like button, subscribe to this YouTube channel, check out my free trade letter tomorrow. You're getting free altcoin setups, which you can find in the description beneath. Also, we've got a nice copy trading solution to our platform. Become a premium member, be able to follow my portfolio and also follow our trade IDs. We have made 37R, which is 37%. If you risk 1%, you can use that and you can copy trade that really soon. In the description beneath, you can find all the information, including all the bonuses that we have with BitGet. So today we've had the information coming out when it comes to the markets, which is essentially GDP, advanced GDP, which is the most important one. It gives you the idea of Q4. And as you can see here, there are several important versions. The advanced one, preliminary, and the final one. So every month you get a part. The first one is the most important one, as it shows you that we are or what the actual idea is of, or the concept is of what the past quarter has been for the economic markets. And despite that they will probably be destroyed at some point this year, the data came out in a positive way. As we can see, the annualized format, it gives you 2.9%, while previously it was 3.2%. Right now we've got another green quarter, which is 2.9%, resulting into avoiding a recession, as we had two negative months here earlier and now we are still into growth. That is great. It is suiting again that the markets and the economy are strong. But you should be keeping an eye on the unemployment, which is going to rally up at some point. You should be keeping an eye on inflation. And you should be keeping an eye on all the data that comes out when it comes to the economy overall, which is housing numbers, housing rates, which means of the manufacturing indexes. Those will all give you an idea of what's going to come at a later point this year, as most likely with those hikes there is a delay of 6 to 9 months, which inevitably in a few months time from now, which is 3 to 6 months, will have an impact based on that. So for now we still have that relief period. We've got a great number when it comes to the GDP. We also have an advanced GDP price index, which came in higher than expected. What is it? It's the broadest measure of inflation encompassing all activities, including in GDP, and is a primarily instrument that the central bank uses to assess inflation. Great part is that we are still dropping, so we went from 8.7 to 4.1 to 3.5. So it is dropping. We're getting towards the crucial number of 2. But it's higher than expected, but we are still continuing to fall, so that's why you saw the markets in at first glance reacting in a positive way. Then we also had the durable goods orders month to month that started to rally again, good number. Unemployment claims, also good number, and we still have new home sales to come out today, which is after I've been making this update. And we also have a big number tomorrow, which is the PCE price index month to month. Everything is good, and what you don't want to see with the PCE price index is that it starts to rally, so that we have a higher number taking place that is going to rush the DXY towards new highs. What you don't want to see is the home sales going worse than expected, because then the recession will start to kick in sooner and the consumer sentiment you want to keep on being positive. When we're looking at the markets, we can see that there's an impact on the markets by no means. So the DXY bounced by a little. It is still on the edge of a reversal, so maybe tomorrow or maybe Wednesday will do, in a sense that the Fed will just continue its policy, as there is still no argument to switch. There is no recession, there is no low unemployment, so they will continue hiking, while the markets are actually pricing in a fact that they will not continue hiking, or at least slow down the pace. It could be done. And we have seen that there's no real yield adjustment at this point either. But I think that they will just continue the policy. We might have a soft landing, and therefore we can see that the markets continue to have this upwards rally, as also the Nasdaq is continuing to grind towards the resistance zones made a double bottom structure and is on the edge of a breakout. So it's into a resistance, which you should be taking into account when it comes to trading. When we're looking at Bitcoin at this point, we can definitely tell that Bitcoin is in the same chapter at this point, which is facing resistance zones. We have been watching some levels and we have been saying, hey, the area around 23.1 is definitely the key zone. We broke through it and took all the liquidity that we had here above us, and now we fell back beneath and consolidate again. So when we're looking at the daily time frame, it is on the edge of having a potential correction taking place, but we need more confirmation for that, and we still have this resistance that's all up to 24.5. Taking the liquidity here, consolidating as well, is not really granting any continuation of the upwards trend. The ultimate question will be whether we are rejecting at 23.3 and start making new lows. That will give you the guarantee, or get close towards the guarantee, of going beneath 22.3 and retesting 21.3. If we do crack 23.2, just keep your eyes on 24 and a half, and then you'll be good. Also keep an eye on what the Nasdaq will be doing on the resistance zones. And then looking at a few projects that are overpriced at this point, one of them is the one that gets hyped so much, which is Aptos. Aptos is in the list, and it's a difference between CoinGecko and CoinMarketCap, as here it's only on the 27th place with a market cap of 3 billion. The total fully diluted market cap is 220 billion.1, which is, if it gets all unlocks taken account of, we are getting into a stage where it's going to pass XRP closely. That's a joke. That doesn't make sense. It doesn't justify the fact that Aptos is rallying this much at this point. So you can definitely argue that there's a correction on the horizon, and I potentially see it on all markets at this point, as also Phantom and also Matic have been rallying massively. So what are the levels that you should be watching if you want to get into Aptos? It's definitely not the period to do it right now, because of the fact that everything has been accelerating so fast. Why would you want to rush into Aptos right now? Well, a month ago it was at $3 and nobody wanted to trust into the project at all. Be conservative, take it slow, and start understanding the concept of the marks to trick you into the position you don't want to be in. What are levels you should be watching when it comes to Aptos? I think that over time we can still rally to 23.25, doesn't really matter, but you have to be looking at levels around $14 for a potential bounce play, which can generate you a potential bounce play of close to 30%. If we get lower, you're looking at $8. And then if we get to 14, you can start targeting a new rally, but most likely we're getting to a stage where you get that correction. If you want to get into a position on this one, be calm. Alright, tomorrow I'll be diving into altcoins some more. Maybe I'm going to make a bit more updates. Take care. Ciao.